This video is for educational and informational purposes only, reflects personal opinions, and does not constitute financial or investment advice. Trading Forex involves risk and may not be suitable for all investors. Always do your own research or consult a licensed financial advisor. Your trading decisions are your responsibility. Welcome back to Forex Mastery. In our last episode, we broke down the numbers: pips, lots, spreads, leverage, and how profit and loss are calculated in a Forex trade. Today, we're going from theory to practice. You're going to learn how to actually place a trade. We're going to explore how to use a trading platform, specifically MetaTrader, which is one of the most widely used platforms in the world. We'll cover how to enter and exit trades, how to use stop loss and take profit tools, and what order types exist beyond simply buy and sell. We'll also look at how execution works behind the scenes, what slippage is, and how you can protect yourself from surprises when markets move fast. Let's begin with the trading platform itself. Most Forex brokers give you access to a platform like MetaTrader 5. Both are powerful. Both are free to use. They let you analyze charts, apply indicators, and most importantly, execute trades. If you haven't downloaded a demo account yet, now's the time. You can follow along with this video and get used to placing trades in a risk-free environment. When you open MetaTrader, you'll usually see four main areas. First is the chart window, where the price of a selected currency pair is shown in real time. Next is the market watch, that S, where ULLC, a list of available instruments. Their bid and ask prices, and often their spread. Then there's the navigator, where you'll find indicators, scripts, and expert advisors. Finally, you have the terminal, which is the panel at the bottom where you'll see your trade history, open trades, account balance, and more. Let's say you want to place your first trade. The simplest way to do it is by opening a new order window. You can do this by right-clicking a pair in the Market Watch window and selecting New Order, or by pressing F9 on your keyboard. Small order window pops up. This is where you tell the platform exactly what kind of trade you want to place. At the top, you'll see the symbol. Make sure you're trading the pair you want. Then you choose the volume. This is where you input your lot size. Remember from last episode? One standard lot is 1.00, a mini lot is 0.10, and a micro lot is 0.01. Below that, you'll see options for stop loss and take profit. You can fill these in now or adjust them later. Setting them ahead of time is a good habit. It builds discipline and protects you from emotional decision-making during a trade. Now you'll see two buttons: Buy by Market and Sell by Market. These are market orders. When you click one of these, your trade is executed immediately at the best available price. If you choose Buy, you are buying the base currency and selling the quote. If you choose Sell, you are selling the base and buying the quote. But market orders aren't your only option. Let's say you believe your USD will rise, but only if it breaks above a key resistance level. You don't want to enter yet, but you want your platform to place the trade automatically if that price level is reached. That's where pending orders come in. MetaTrader offers four types of pending orders: buy limit, sell limit, buy stop, and sell stop. A buy limit is used when you want to buy below the current market price. For example, if your USD is trading at 1.1000 and you want to buy it only if it drops to 1.0950, you would set a buy limit order at 1.0950. A sell limit is used when you want to sell above the current market price. So if your USD is at 1.1000 and you believe it will rise to 1.1050 before falling, you'd set a sell limit order at 1.1050. A buy stop is used when you want to buy above the current price. This is for breakout traders. If your USD is at 1.100 and you want to buy if it breaks 1.1050, you'd set a buy stop at that level. A sell stop works the same way, but in the other direction. You set it below the market price, and it executes if the price drops to that level. Pending orders are powerful tools because they let you automate your strategy. You don't have to be at your screen 24/7. You just set your conditions. Place your order and let the market do the rest. Let's say you're trading a news event. You think the market might break out, but you don't want to guess the direction. One strategy would be to place both a buy stop and a sell stop on either side of current price. A breakout trap. If price spikes in either direction, one order is triggered while the other is canceled. Of course, any order you place is subject to execution. Execution means how and when your broker fills your order. With market orders, you may not always get the exact price you see on the screen, especially during fast market conditions like news releases. That's where slippage happens. It's just when your order is filled at a slightly worse or better price than expected. Say you hit buy on EUR USD at 1.1 UOU, but due to sudden movement, your trade is filled at 1.1 UO3. That's 3 pips of slippage. Sometimes it goes in your favor, sometimes it doesn't. Reputable brokers try to minimize slippage, but it's part of trading, especially in fast-moving or illiquid markets. Now let's talk about trade modification. Once your trade is active, you can adjust it. You can drag your stop loss or take profit directly on the chart. Or you can right-click your trade in the terminal and select Modify. You'll see a window where you can manually enter a new stop loss, take profit, or even set a trailing stop. A trailing stop is a dynamic stop loss that follows price as it moves in your favor. For example, if you're long on EUR USD and the price rises, the trailing stop moves up with it. But if the price turns against you, the trailing stop stays fixed. And if price hits it, your trade closes automatically, locking in profit. This tool is great for trend trading. It gives your trade room to breathe while also securing gains as the market moves in your direction. Let's take a practical scenario. You buy your USD at 1.1000, you set a 20 pip, stop loss at 1.0980, and a 40 pip take profit at 1.10400. You also enable a trailing stop of 15 pips. Price starts moving in your favor. When it hits 1.1015, your trailing stop activates at 1.1000 break-even. If price continues to 1.1030, your stop moves to 1.1015. If price then reverses, you're stopped out in profit. If it keeps going to your target, you hit full take profit. Either way, you've protected the trade. This is how real traders operate, with logic, structure, and smart use of tools. They don't just enter trades randomly and hope for the best. They build trade plans that include entry, stop, and target, all managed directly through the platform. And don't forget your trading history. Every trade you place, win or lose, is stored in the terminal's account history tab. Review your trades regularly, see what worked, what didn't, and where your emotions got involved. Your platform is more than a place to execute trades. It's your trading journal, your control center, and your learning tool. Now, a word on demo accounts. If you're just starting, trading on a demo account is the safest way to practice without risking real money. It lets you get familiar with the platform, test strategies, and build confidence. But don't treat demo trading like a game. Take it seriously. Use proper risk management. Simulate real conditions. Because how you trade on demo is how you'll trade live. Eventually, when you're consistent, you can switch to a live account. Start small. Don't rush. Focus on process over profits. Let your skills compound, not your stress. So what did we cover today? We looked at how to use the MetaTrader platform to place market and pending orders. We explained how stop loss and take profit tools protect your capital and automate your exits. We introduced slippage, trailing stops, and trade management tools that help you react quickly and safely. And most importantly, we showed how every trader, whether beginner or pro, uses their platform not just to trade, but to execute their strategy with confidence and control. In the next episode, we'll move into the art of reading charts. You'll learn how to use candlesticks, spot support and resistance, and start developing an eye for price action. This is where strategy really begins, where you shift from reacting to predicting. Subscribe, stay focused, and bring your curiosity. Because from here on, we're entering the mind of the market. From zero to hero, this is Forex Mastery.